What's up YouTube? It's your boy Ronell back with another video on our channel here. We're invested. We are going to be discussing here today how to make $1 million in the stock market within 5, 10, 15, and 20 years. I'm going to break that down for you right now. Y'all stay tuned. Alright, now before we get started, I just want you guys, if you got any questions, go ahead and make your questions down there in the comments section. I'll be more than happy to help you guys out. There's no such thing as a stupid question, especially when it comes to your money. So be sure to ask any questions that you have. Even if you want to, if you go ahead and look at my profile here, you'll be able to see me, send me an email of any personal questions relating to stock market investing, and I'll be able to help you guys out. Also, down in the description, there's a link there. If you click that link and sign up for Webull, you'll get free stocks. All you got to do is sign up for the for a Webull brokerage account, deposit any amount of money into that account. It could be 1 penny, and you'll get those free stocks. So go ahead and do that and get that free money, guys. All right, I got 7 rules for you. Rule number 1, you want to make sure that you have income. That's the number 1 thing. You can't build wealth with no money at all. So, I mean, I know people are giving money, but most of us that's watching this video here now today are like me, and we don't have anything being given to us. We got to bust our butts for it. So you got to have income, whether it's your 9-to-5 job, a business that you run, whatever it is. You got to start off with that first and foremost. It doesn't have to be a super high income paying job. As long as you're able to have something left over after paying your bills and your essentials that you have to save and invest, then you're absolutely fine. The goal is to have more money to throw into the markets and do it on a consistent basis. One of the main tricks I would say would be to develop more than one source of income. If you Google it and look it up right now, most millionaires, they're self-made millionaires, by the way, at least like 80% of them, like they did this on their own. There was no one that was giving them anything. But one thing that they all had in common is that they had about, at least on average, about 5 different sources of income to get to those levels of wealth that they actually had built out. Okay, rule number 2. Listen up here. Live beneath your means. Stop trying to keep up with the Joneses, man. If you don't have that money, then you don't have that money. It's better to go ahead and live like most won't now, so you can live like most can't in the future. I know you probably heard that before, but that's the gist of it. That's facts. That's real talk, man. So you want to learn how to live beneath your means. My advice to you is to do what I did. A lot of millionaires do this as well. You want to write down everything that you're spending money on within the month. You know, all of your bills and expenses, everything that you pay for, no matter what it is. Once you get that list down, the next thing you do is go down that list and X out all of the stuff that you actually don't need. If you need it, good, you keep it on there. But if you don't need it, man, get rid of it. Get rid of the cigarettes, the alcohol, gym memberships. Go ahead and work out at home for some time. You know, go ahead and get some money built out, man. You could get your own gym and save money. Get some bands and start getting weights and things like that. But you got to learn how to live beneath your means. After you X all of these things out, if there's still no money left over to invest, then at this point you have what I call an income problem. This is a point where you need to ask for a raise at your job. You need to develop more streams of income, as I mentioned to you before. Start a business, jump into real estate. Whatever you can do to develop these multiple streams of income is going to help you to get higher in your wealth. Okay, so rule number 3, you want to do this here as well. I call it investing versus savings, because you could do both, because I do both as well, but there's levels to investing that you need to know, and as far as savings as well, there's levels to that. So as far as savings, you could do a savings account, but my advice to you is to not do any typical bank, the big banks that you see that you walk up and down the street. You want to find an online bank, something that's online only, preferably, but you want to look for a higher yielding bank. So if you get one that's online, they don't have all of the locations, brick and mortar locations, where they have to pay for overhead, lighting, and extra employees and things like that to run that bank. It's all online, so they save lots and lots of money, which they're able to use to give you more in interest that you on the money that you have saved into those accounts. So do that as well. Those things will definitely help you. Also, with savings, you can save money as well. I mean, that's cool, but you got to think about it over the long term. That money against inflation, which goes up about 2 to 3% annually, is losing its value. The cost of living is always going up. As you can see now, you guys are looking at gas prices, food, housing, all of this stuff costs way more than it did 20 years ago. So if you had $1 million 20 years ago, you were probably doing a lot better than you will be right now if you had $1 million, because that $1 million then will get you a lot more than what it will now. Excuse me. But it's true though. Even like 20 years from now, you got $1 million now. If you hold it, it's not going to buy you the same amount of things that it's going to buy you here today. It's not going to have that type of buying power anymore because of inflation and overall cost of living going up. Quick flash example. Check out this screenshot of the S&P 500 I'm going to show you guys right now. 3 screenshots. One is going to be for, excuse me. One's going to be for the maximum, the overall return. One's going to be for 5 years, and then one's going to be for 1 year. Now, if you see, look at the big one here. This is the max one. This is the entire S&P 500 for its lifespan. As you can see, overall, this thing is green. It's going up 3,000 something percent. Like if you look at this for the long term, it's going to always go up. You see little dips in there. It's too small to see now because you're looking at the long term picture of it, but there's dips in there which you want to buy because over the long term, as you can see, it's going to build wealth. Even though it's going to be doing it at a 10 to 11% rate, adjusted for inflation, you're going to be looking at about 7 to 8% actually. But over time, you're always going to build wealth, and it's going to be safe with going with just the financial market as a whole, the S&P 500. Now, if you look at this here, you see the red circles that I put down here. These are the dips. And what I like to do here is what they call buy the dip. It's just think of it like this. If you buy something and say you buy a pair of shoes, they're about $100 or whatever, right? You look up 2 weeks later and they're on sale for $50. And now you're looking like, man, I could have waited and got them for a lot cheaper. Now, same thing with a stock. If you watch the market, you don't want to wait. You don't want to time the market. You want time in the market because long term, as you can see, and as I mentioned, it goes up. So buying the dip is the same thing. You want to buy the stock at a cheaper price than you originally bought it for whenever it dips that low. And that way, over the long term, you can constantly build wealth with compound interest. Rule number 4, utilizing calculators and calculations. In the link down here, I'm going to have a link for a compound interest calculator through moneychip.com, and also with that Webull link where you can get those free shares. While you're down there, hit that like button for me too. Don't forget to do that for me. Now, I'm not being paid by any of these companies with Webull, with moneychip.com, or any of these platforms that you see here, not even Fidelity, and that's where majority of my wealth lies. But I use these and I know that they work, so I refer them to you. But there's no benefit on me referring them to you except for the link in the description. You guys, once you sign up, everybody gets their own link to use to share and to get more people in and to get more stocks for free. So it's a big circle there. So just make sure that you take advantage of it. Now, what this compound interest calculator does is it shows you what your investments will return to you over a set period of time, including your annual contribution alongside the interest that it's going to keep incurring over that time. So it is a good tool to use as far as investing and doing business with and just figuring out numbers that you need to crunch down on. Now, rule number 5, just keeping up with your studies and looking at the overall market. A good way to do that is using the S&P 500 index. If you Google that and look it up, is what it's going to show you is that this is the top 500 companies in the U.S. stock market. What it does is very diversified, so it's easier and safer as far as building wealth. It's a safer bet on the market as opposed to buying individual stocks like I do. It's a lot more riskier. At the same time, there's a bigger reward on that end as well. If you know what you're doing, you can make a lot more money in a shorter amount of time with individual stocks as opposed to the S&P 500 index. They have ETFs that you can use to buy that. Now, also, you're still going to get those gains because like I showed you over that time frame, you can see the gains there of the S&P 500. But it's a safer route. It covers all 11 sectors. It's more so tech heavy. Tech leads the way. But there's technology, there's utilities, oils. I mean, there's everything. Everything is going to be included there. Not oil, but oil stocks like Chevron, things like that. Energy, healthcare, you name it. Those things are there. So it's going to cover you and it's going to have you diversified to where when one end or one sector is having trouble, you still have money in the market that's going to be making money while it's in there. And again, here's those screenshots of the S&P 500. Look at those screenshots. The 5-year span here, you see that? Even in the 1-year span where it's all red here, you see it's down over the past 1 year. But like I told you, if you go back and look at the 5 years and the long term, the maximum on it, you're gonna make money. So that's why you gotta stay invested into the markets. Time in the market, not timing the market. Be smart. Rule number 6, using the knowledge. Using the knowledge that you gain from utilizing the compound interest calculator and different business tools as far as investing, and doing your own homework and studying individual stocks and the market as a whole. That's going to be that rule. Now, using the compound interest calculator, if you see the screenshot that I'm putting up here, this is what it is for 5 years. To get the amount of money you need to make, which would be that $1 million in 5 years, you're going to have to invest just over $13,000 a month to meet that goal. And it's for 5 years. So it's not a very long time, but it is a significant amount of money to be investing into the stock market, especially if you don't have that type of income. It could be very hard to do. Now check out this screenshot for 10 years. Now, if you look at this for 10 years, it's a lot less strenuous on you. That's why I say time in the market is a lot better over the long term, because it's a lot less strenuous as far as watching your money fluctuate, and it's less that you actually have to contribute. You can contribute more also, and go for longer terms, but it's up to you on how you want to do this. This is just my example for you guys to get an understanding on how it's done. But with this one here, you only have to invest just over $5,000 a month to get there in 10 years, which is a lot easier if you have that type of money laying around again. As far as your income, you want to make sure that you up that, because if you don't, you will never be able to reach these goals and make enough money to get into the market at a level to where you can build to $1 million. You're just going to be doing small amounts for a long time and never account for anything if you don't put enough into it. Now, it gets even easier. 15 years just takes over $2,800. The longer you have, the safer it is, and the less strenuous it is, and the less money that you have to put in. It's just like small things. That's why I say it's small things that you can cut out of your bills and expense, not out of your bills, but out of the bills and expenses list that you wrote out and everything that was on there. Once if you can cut those things out, I'm telling you guys, it doesn't take much to put into the market to get to these levels in these small amounts of time. And if you're doing this on individual stocks, it's even faster. You can get gains such as 15, 20, and even 30% if you're doing individual stocks. Now, last but not least, 20 years. If you do $1,691 to be exact, I believe that is, you'll get that money of $1 million in the stock market within 20 years, guys. And that's not a lot of money. I'm gonna be honest with you. It's like pretty much $1,700. It's not a lot of money. It's close to $2,000, close to $2,000. Like I said, if you can't do that, then you're going to have to put a lot more money into the market, or you're going to have to be in the market over a longer period of time, or you can do what I do and choose the route of taking a little bit more risk and buying individual stocks. Now, the younger you are, the easier that is to do, because you have more time on your hands before you have to retire. The goal is to get to a number to where you can retire, guys. I just wanted to give you a millionaire's goal, but the goal is to get to a number where you can retire, to where you can live comfortably. And every number for that, every person is different. They all have a different number to where they can live comfortably. So you do those calculations. That's why I gave you the calculator. Y'all play with that and see how it works out for you. Okay, you guys. Now, the market has been doing pretty good for the last, I want to say, like 2 months or so. But this past week, everything is red. I'm talking about red. It's all red. Look at the public account here today. Like, seriously, guys, I'm talking about, I ain't seen it this red and I don't know how long. I got 5 stocks at the top. You see those? I got that circled. Foot Locker and a few other stocks here. I got circled in the green right there if y'all look at that screenshot on the Fidelity account. But Foot Locker ended up going like 20% up. I think that was Friday. The last trading day was Friday, and it went nuts, dude. So that's the only reason that stock is up like 30% in the portfolio. But other than those 5 stocks that I got circled, all the other stocks, it's ridiculous. It's just all red. Like, look at this. I got 2 screenshots here because I got a couple other stocks that got cut off in the screenshot, but check those out too, these couple here. But yeah, it's all red, man. The account is down. But like I said, you know what we're doing here? We're invested. We're not scared. You know what I'm saying? We're going to buy the dip. So for right now, that's all I have for you guys here today. Tune in next week where I'm going to be going into detail on my #1 stock here, which is Tesla. I'm going to give you my bullish thesis and why I think this company is going to continue to be successful, and why we're going to become millionaires off of investing into these stocks that I'm purchasing. Also, if you've been following along, like I said, it's my number one investment. Tesla's doing another stock split. It's a three-way split. So I believe they're about like $850 now, close to $900. So they're going to go down to maybe about $285, $300 a share within the next few days. So follow along, stay in tune with the channel. I love all of you guys for subscribing. I love y'all for following. Make sure that y'all hit the like button for me. Click on the links in the description for the Webull. Get those free stocks. Also, moneychip.com, so you can get that compound interest calculator, and make sure that you hit the notifications bell, man. That way you can get notified of when these videos come out, which will be every week. Again, thank you guys for being invested. We're invested, and we out.